All right, look, I need you to understand something right now. What I'm about to tell you might sound absolutely insane, but I promise you, this is happening as we speak. And honestly, I'm still wrapping my head around it myself. But here's the deal. Silver, yeah, that shiny metal you probably never think about, is about to explode in a way that nobody saw coming. And I mean nobody, because right now, on December 31st, 2025, we're literally watching the global silver market rip itself apart in real time. And when I say rip apart, I don't mean some minor correction or a little price fluctuation. I'm talking about a full-blown fracture where the price you see on your screen is basically fiction, and the real price, the one people are actually paying, is so far removed from that number that it's genuinely disturbing. And you know what's wild? The reason this is all happening comes down to one single event that kicks in tomorrow, January 2nd, 2026, and that event is China dropping an export ban on silver, which sounds simple enough until you realize that China controls a massive chunk of the world's silver supply. And when they flip that switch and stop letting silver leave their borders, the entire global supply chain is going to slam into a brick wall. But here's where it gets absolutely bonkers, because the market isn't waiting until tomorrow to panic, it's already panicking today, right now. And the evidence is everywhere if you know where to look. So let me break this down for you, and I'm warning you, some of these numbers are going to sound completely unreal, but I've checked them multiple times because even I couldn't believe what I was seeing at first. So here we go. The first thing you need to understand is that there's no longer one price for silver. There are three, and I'm not exaggerating. There are literally three different price tiers operating simultaneously across the globe, and this shouldn't even be possible in a connected modern market, but it's happening anyway. So let's talk about Tier 1, which is what I'm calling the panic price, and this is the price in Shanghai, where silver futures just closed at the equivalent of $84.55 per ounce, and that's not a typo. That's what Chinese buyers are willing to pay right now because they know the clock is ticking and they need to secure supply before the ban hits. And these aren't just random speculators. These are manufacturers, battery companies, solar panel producers, people who actually need physical silver to keep their operations running, and they're paying whatever it takes to lock down inventory, which tells you everything about how serious this shortage is about to become. But wait, it gets weirder, because Tier 2 is what's happening in the Middle East, specifically Dubai and the UAE, where physical silver, actual bars and coins you can hold, is trading around $79 to $80 per ounce. Again, way above what you're seeing on Western exchanges. And this price reflects real transactions, real metal changing hands, not just paper contracts or digital entries. And then there's Tier 3, which is the zombie price, and that's what's showing up on the COMEX in New York, where silver is still quoted near $72. And I'm calling it the zombie price because it's basically dead. It's a walking corpse that doesn't reflect reality anymore. It's just a number on a screen that keeps updating even though nobody with actual silver is willing to sell at that price. And the gap between Shanghai and New York is now over 17%, which, let me tell you, should be absolutely impossible in a functioning global market, because in normal times, arbitrage traders would instantly jump on that spread. They'd buy in New York at 72, ship it to Shanghai, sell at 84, pocket the difference, and keep doing that until the prices converged. Except that's not happening. And you know why? Because they physically can't move the silver into China before the export ban starts. So arbitrage has collapsed. The mechanism that's supposed to keep global prices in sync is completely broken, and New York has become this isolated island of paper trading that has zero connection to the physical metal those contracts are supposed to represent. And honestly, watching this unfold is both fascinating and terrifying, because it's like watching the foundation of the entire pricing system crumble in slow motion. But it's not actually that slow, because all of this has escalated in just the last 48 hours. And now let me tell you about something that happened yesterday that should absolutely alarm you. Delivery volumes on COMEX just went completely haywire, and I mean haywire, because normally COMEX is a paper market where people trade contracts and almost nobody actually demands physical delivery. Like the day before yesterday, only 69 contracts stood for delivery, which represents about 345,000 ounces. And that's typical. That's how it usually works. People roll their contracts forward, they settle in cash, they don't want the hassle of dealing with actual metal. Except yesterday, December 31st, that number exploded to 1,847 contracts, representing over 9.2 million ounces. And let me do the math for you real quick. That's a 26-fold increase in a single day, and that is not normal. That's not a gradual trend. That's panic. That's institutions, banks, funds, industrial players, all simultaneously deciding they don't trust paper anymore, and they want the real thing. They want physical metal in their vaults before the supply chain locks up. And this surge is absolutely devastating for the bullion banks that are short silver, because these banks sold contracts expecting to settle them financially, not physically. They never thought they'd actually have to deliver the metal, but now they're being forced to either drain their own vaults or go into the open market and buy silver at $79, $80, $84 per ounce when they sold it at $72 or less, and both options are destroying them. They're taking massive losses, and this is where things get really interesting, because apparently the Federal Reserve noticed this chaos and decided to step in. And when I say step in, I mean they conducted 2 emergency repo operations in the last 48 hours, totaling $5.8 billion, $3 billion on one day, then another $2.8 billion the next. And officially, the Fed doesn't announce why they're doing this, but the timing is absolutely perfect for a secret bailout of bullion banks that are getting crushed by physical delivery demands. And I'm not saying the Fed is explicitly saving silver shorts, but I am saying that injecting nearly $6 billion into the banking system right when silver delivery obligations are exploding is one heck of a coincidence. And there are reports that major banks like JP Morgan, Citi, Bank of America are extending delivery timelines, increasing loan loss provisions, quietly delaying settlements, all the classic signs of a bank that's under stress. And in my opinion, this looks a lot less like a liquidity crisis and a lot more like a run on physical metal. And while all this is going on in the West, the situation in China is even more extreme, because Shanghai vault withdrawals have gone absolutely ballistic, and I'm talking about numbers that are frankly hard to believe. 41 metric tons of silver withdrawn one day, 43 tons the next. That's 84 metric tons in just 48 hours. And to put that in perspective, normal daily withdrawals are around 3 tons, so we're looking at a roughly 1,400% increase in daily withdrawals, and the total inventory at the Shanghai Exchange has dropped from 755 tons to 727 tons in 2 days. And if this pace continues, the entire inventory could be gone in a matter of weeks, maybe even faster once panic really sets in. And these aren't just industrial users withdrawing metal for manufacturing. This is strategic hoarding by the Chinese government, by battery manufacturers, by solar companies. All of them are locking down physical silver because they know what's coming. They know that after January 2nd, every ounce inside China stays inside China, and every ounce they secure now is an ounce that the rest of the world can't have. And this is creating a permanent reduction in the global float, meaning the silver that's being pulled out of Shanghai isn't coming back. It's gone. It's off the market forever, or at least for the foreseeable future. And that's making shortages everywhere else even worse, because the global supply is literally shrinking in real time. And it's not just China, because major corporations around the world are also panic buying. And when I say panic buying, I mean companies that normally operate on just-in-time inventory models are suddenly securing 6 months worth of silver, like Samsung allegedly just locked down a 6-month supply when they normally keep about 2 weeks on hand. And there are reports that companies are authorizing procurement teams to pay above spot, to pay premiums, to do whatever it takes to get immediate delivery. And this tells you that industrial users have completely lost faith in the idea that silver will be available at reasonable prices in the future. They're prioritizing physical possession over cost, and that is a huge shift in behavior. And then there's the retail market, which is absolutely insane right now, because if you go try to buy a silver coin in the United States, you're not paying $72 per ounce, not even close. American silver eagles are trading with premiums of $12 or more over spot, which puts the real acquisition cost near $84, basically the same as Shanghai. And Canadian maple leafs, generic rounds, all of them are carrying historically extreme premiums, and dealers are either pulling inventory entirely or posting long delivery delays, and wholesalers are going out of stock left and right. And what this tells me is that the retail market has completely decoupled from the paper price. Dealers can't restock at $72, so they're pricing based on what they think silver will actually cost when they try to replace their inventory, and they're betting it's going to be a lot higher than what the screen says. And honestly, I think they're right, because everything I'm seeing points to the same conclusion. The paper price is dead. It's meaningless. It's a zombie number that keeps updating even though nobody with access
actual silver is willing to sell at that price. And here's what happens next, and this is where the timeline gets really tight, because we're literally in the final hours before the China export ban goes into effect. And I've been thinking about this in 3 phases. Phase 1 is right now, the last few hours of liquidity before markets close for the new year. And during this window, anyone who understands what's coming is scrambling to get whatever physical silver they can. Phase 2 is the void, the New Year's holiday when official markets are closed, but off-market deals are happening, panic procurement is happening, private transactions at crazy prices are happening, and nobody outside those deals knows what's really going on. And then there's January 2nd, when markets reopen and the export ban is in force. And I think we're going to see the paper price gap up in a historic way, because when traders realize that physical silver is trading 15, 20, maybe 30% higher than the COMEX quote, they're going to adjust. And that adjustment is going to be brutal. And I wouldn't be surprised if we see force majeure declarations, cash settlements instead of physical delivery, legal disputes, all the chaos that happens when sellers realize they can't actually deliver the metal they promised. And in my opinion, this is the end of an era. This is the moment when paper silver pricing collapses and we move into a new regime driven by